The stock market is in turmoil, and you need to know how to navigate it. Today, we'll explore the significant movements in global markets to expect from June 23rd to June 27th, 2025, and what scenarios may happen next week. Recent geopolitical events, especially the U.S. strike on Iran, are influencing trading behavior. Analyzing these changes will empower your investment decisions. From June 16th to June 20th, markets felt the strain of central bank decisions and geopolitical unrest. The Federal Reserve informed us that rates would stay at 4.50%. This hawkish stance supported the U.S. dollar while pressuring tech stocks. Meanwhile, the Bank of Japan held steady, and the Swiss National Bank surprised everyone by cutting rates, dramatically impacting the Swiss franc. Inflation numbers played a crucial role. The UK saw consumer prices ease to 3.3%, while Europe's inflation remained stable at 1.9%. In the US, retail sales presented a mixed picture. The S&P 500 and Nasdaq fluctuated, influenced by the Federal Reserve's commentary and global tensions. Iran and Israel's escalating tensions stirred oil prices, pushing WTI crude higher to nearly $77.60. By week's end, major indices finished lower, highlighting market sensitivity to these developments. Next week, June 23rd to 27, all eyes will be on U.S.-Iran-Israeli relations. The potential for retaliation from Iran could trigger further market declines. We anticipate 3 scenarios. Controlled diplomatic engagement, 30% chance. Oil prices may rise slightly, but equities will likely open lower. Expansion into wider conflict, 70% chance. If tensions escalate, oil could exceed $80 per barrel, impacting equities negatively. Swift de-escalation, 10–15% chance. This could lead to a market rally and lower oil prices if a ceasefire occurs. Investors need to monitor key macro data amidst these geopolitical challenges. Eurozone PMIs and Germany's IFO business climate get released next week, which can sway market sentiment. U.S. durable goods orders and the PCE price index will also be vital for inflation insights. The S&P 500 is gearing up for a rocky week in response to these factors. If Iran retaliates or oil spikes due to supply fears, expect market volatility. What's happening in cryptocurrencies? Bitcoin has not been immune to these tensions. On June 21st, it dropped to around $102,000, signaling a cautious investor sentiment. Institutional demand through exchange-traded funds helps stabilize Bitcoin above that key threshold. This week also marks the end of earnings season, featuring reports from companies like AVAV, NKE, and others. To summarize, stay vigilant about geopolitical developments, monitor oil prices and earnings reports closely, protect your portfolio, and watch for opportunities, but approach new positions with caution. Don't forget to subscribe to Kai Wealth for ongoing analyses and insights on emerging trends. Stay informed and make confident investment decisions this turbulent week ahead.